Welcome to this explainer. Deep inside Kura Sushi USA's latest SEC Form 10Q filing, there's actually a really fascinating financial paradox hiding in plain sight. If you've ever been to a revolving sushi bar, you know exactly how mesmerizing that conveyor belt can be, right? Well, the financials driving that belt are honestly even more captivating. Today, we're going to break down their numbers from the quarter ending May 31, 2026, and uncover a serious mystery about where exactly all their money is going. Let's just start right out of the gate with this absolutely massive number, $85.9 million. That right there represents Kura Sushi's record-breaking top-line sales for just 3 months, their third quarter of fiscal 2026. To put that into perspective, that is a staggering amount of sushi rolling past customers. It reflects a huge, sustained demand for their tech-enabled dining experience across the entire country. But here is the central mystery we're looking at today. How on earth does a company pull in almost $86 million in top-line sales in a single quarter, but when all is said and done, they walk away with a net income of just $423,000? Think about that. They kept less than $500,000 in actual profit. So where in the world did the other $85.5 million go? Okay, let's dive into this. Section 1, the revenue engine. If we zoom out just a bit to the 9-month period ended May 31st, 2026, you'll see this revenue engine isn't just humming, it is literally roaring. 9-month sales hit an incredible $239.3 million. That's up significantly from the $203.3 million they made during the exact same period the prior year. So the top line, it's incredibly healthy, proving that their core business model of getting people into seats is working absolutely flawlessly. Let's keep moving down the financial conveyor belt, shall we? Section 2, counting the costs. And this brilliantly illustrates exactly what's eating into those impressive sales. Out of $75.6 million in total restaurant operating costs for the quarter, it's pretty clear what takes the biggest bites. Labor and related costs are sitting at $26.3 million, and food and beverage costs are right behind them at $25.9 million. Making fresh sushi and staffing these bustling, tech-forward restaurants, well, that eats up over $50 million before we even start looking at rent or corporate overhead. Now, when we talk about labor costs, it's actually not just about hourly wages and salaries. The SEC filing reveals a bit of a reality check from earlier in the year. Back in February 2026, the company agreed to settle a wage and hour class action lawsuit for $900,000. This adds a very realistic layer to the whole labor discussion, right? Managing a massive workforce carries inherent legal and operational risks, and those directly impact that bottom line. Section 3, the Japan connection. You see, Kura Sushi USA isn't entirely on its own out here. Through a shared services and license agreement with Kura Japan, who happens to be their majority stockholder, they heavily rely on the parent company for some really critical elements. This includes things like the Core Sushi trademarks, the patents for their unique Mr. Fresh protective sushi dome, the one that keeps the plates safe on the belt, as well as specialized tech, supplies, and expatriate support staff. But, as you might guess, that intellectual property definitely isn't free. In exchange for these exclusive licenses, Kura USA pays Kura Japan a royalty fee of 0.5% of their net sales. Now, 0.5% might sound like a tiny drop in the bucket, but when you're doing nearly $86 million in quarterly sales, it adds up real quick. For the first 9 months of the year, they paid nearly $1.2 million in royalties alone, which all gets categorized right under their other costs line item. Let's move to and see how this builds on the balance sheet. Section 4, the cost of growth. Take a look at this massive spike in physical assets. Between August 2025 and May 2026, their total net property and equipment jumped from $171.2 million up to $203.8 million. That is an enormous amount of capital being deployed in a really short window. And if you dig into the footnotes, one specific category completely stands out: construction in progress. That alone skyrocketed from $11.2 million to over $18 million in that exact same time frame. And their commitment to physical growth doesn't stop there. The lease notes actually reveal a staggering figure. Quoting directly here, $54.8 million of operating lease liabilities related to restaurants for which the company had not yet taken possession. What that accounting jargon basically translates to is this: they aren't just looking at potential real estate, they are aggressively locking down physical buildings for a massive wave of new locations. They are completely 100% committed to this future expansion. Section 5, the bottom line. So the crucial point is this. Back in August 2025, they were sitting on $47.5 million in cash and cash equivalents. By May 2026, that number drops down to $24.4 million. Despite generating these incredible top-line sales, they aren't hoarding cash at all. They're burning through it, alongside that entire $85.9 million in quarterly revenue, just to pour capital into new property, new equipment, and new leases. Essentially, they are willingly accepting razor-thin net income today to fund this massive expansion for tomorrow. Which leaves us with the ultimate question, doesn't it? Kura Sushi is taking practically all of its record-breaking sales and immediately funneling them right back into the ground to build the sushi restaurants of tomorrow. It's a classic high-growth, high-cost bet. Now, they've clearly proven they can pack the restaurants they already have, but as they drain their cash reserves to rapidly multiply their footprint across the country, will this aggressive investment strategy ultimately reward long-term investors? Well, it's a bold move, and keeping an eye on their next few quarters of SEC filings will be the only way to find out for sure. Thanks so much for joining me on this explainer.